Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This is where we get everything we need to know in 90 seconds at 9 o'clock. With news, interest rate signals are moving a lot today as perceptions of risk change in many directions. But first, today's dairy auction has brought quite a sharp shift lower in overall prices. They were down 3.6% in US dollars from the prior event 2 weeks ago, although with the low exchange rate, the decline in New Zealand dollars was only 2.1%. Skim milk powder prices fell hard, down 7%, and cheddar cheese was even worse, down 9.2%. The dominant volume whole milk powder was down 3%. Since the 15% jump in early March, these prices have depreciated by more than 7%, essentially cutting away half of that March gain. The shift lower today will no doubt have analysts reassessing the 21-22 farm gate payout forecasts. Also slipping more than expected is the closely watched ISM Services PMI in the US for June, although its fall is from a record high in May. This is a story about supply chain constraints with severe difficulties getting supplies and sky-high prices. Amongst the data, though, the employment index turned to contraction. It was data that undermined benchmark bond yields when it was released. The companion market services PMI also fell, and also from a record high, but it didn't show the jobs pullback. In Europe, there is also a much sharper than expected reversal of business sentiment in Germany, although it should be noted that the view of current conditions is still quite upbeat. In Australia, their central bank yesterday held its cash rate at 0.1%, but moved to scale back its massive $237 billion program of crisis quantitative easing. Their weekly additions of $5 billion will now be lowered to $4 billion as a first step. Markets responded by bringing forward their expectations of a rate hike there to June 2023, and far, far later than the November 2021 rate hike expectations in New Zealand. We should also note that yesterday the 1-year New Zealand swap rate surged 7 basis points higher, and the 2-year was up another 8 basis points. That makes the rise since the beginning of June 22 basis points and 30 basis points respectively. This will have bank mortgage pricing people pulling out their calculators. US Treasury 10-year yield starts today at 1.37% and down a sharp 6 basis points after their long holiday weekend. And the price of gold is now at $1,795 an ounce, which is up $3 from this time yesterday. Oil prices have fallen quite hard today, down by $3. In the US, they're now just under $73 a barrel, while the international Brent price is just over $74 a barrel. And the Kiwi dollar opens today just on 70.1 US cents and marginally lower than this time yesterday. The interim rise we saw yesterday afternoon has all now vanished. Against the Australian dollar, we're slightly firmer at 93.6 Australian cents, and against the euro with little change at 59.3 euro cents. That means our trade-weighted index starts today unchanged at 72.9. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.